Hello and welcome to Crux Investor. We caught up earlier today with Brendan Cahill, the CEO of Excellon Resources, silver and gold explorer and developer. If you want our thoughts and opinions on the conversation, the plans going forward, and indeed the company itself, you can find that at cruxinvestor.com/club, where you can also find detailed company reports, commentary from experts from around the world on a variety of commodities and companies. There are summaries of other interviews that we've done. There are training videos, and of course, a thriving community of investors sharing their thoughts and ideas with each other in a nice, safe environment. So do go and join them at cruxinvestor.com/club. And of course, we'd love your feedback too. So do give us a like, leave your comments below. And if you want to see what we talked about, take a look in the description below. Brendan, how are you doing, sir?
Very good, Matt. Good to be back. It's been a while. Very eventful few months for sure.
Who knew when we speak in February, what was going to happen, right? And you're joined by Ben today. Hi, Ben. How are you?
Great. How are you today?
Not too bad. Now, either you two have become farmers or you've got pictures of one of your properties there. What are we looking at, Brendan?
Yeah, so these are actually pictures from our drill sites, a couple of our drill sites in Saxony, Germany, where our Silver City project is. And very exciting results out this week with drilling over 12 kilometers and discovery holes and high-grade silver and kind of everything we've been waiting for. So it's pretty exciting. Good.
We're going to hear about it.
I just don't know how to change it. That's also part of the problem.
That's embarrassing. Get one of your kids to do it. That's what I do
with the blue sky.
Right. Well, look, we're going to hear all about it. But first of all, you're both in Toronto. How's life there? We're all surviving. All good.
All good. It's quiet. It's very quiet, but like everybody, just trying to deal with the pandemic and getting through, and lots of excitement for 2021 with the great news of the vaccines, and I think an incredible precious bull market to come.
Yeah. Okay. Well, look, why don't we, because we haven't spoken for a while, why don't we kind of kick off, give us that 1 minute overview for people perhaps new to this story, and then I'll pick it up from there.
Sure. Excellon's been around for quite some time, over 30 years now, actually. And we're operating the Platosa mine in Durango, Mexico's highest grade silver producer. We made an acquisition earlier this year of Otis Gold for its Kilgore asset in Idaho, which is 1 million ounces at half a gram. A gold development asset, but also an incredible growth project, tons of exploration potential there. And we're exploring our Silver City project in Saxony, Germany, which we optioned in late 2019. But, really a discovery-ready project, as we've proven this week. And really, the way we look at this company is we've got a nice, cash flowing now producing mine in Mexico, funding discoveries on all of our projects, including Mexico. Lots of every single project moving forward now, lots of rigs going and lots more to come.
Right. Okay. Thanks for the summary. Last time we spoke, you were having problems at Platosa. I guess in a bull market like this, lots of problems go away. So how are things down there?
Yeah, that's kind of interesting to say project problems go away in a bull market and then you make more mistakes, right? So, we're really focused and have been for years on controlling our cost profile. And in Q3 of this year, we had record mine tonnage from the operation. We dropped our all-in sustaining cost by 30%, our mining cost or production cost per ton by 22%. As we took some hard steps in Q2, to set the project up for a much better Q3 and going forward. Reductions in the labor force, renegotiations of offtake agreement, changes to mining method, and in Q4, moving to a new electricity provider, which we'll really start to see some of those costs come down further in Q4 from a pretty solid Q3.
Right. I'm interested in what's actually going on there, because when we spoke last, had a big long run, sort of downward trend and downward pressure on the share price. Bit difficult to raise capital with what you were showing the market, but July, you raised nearly $18 million. Has that cash enabled you to address some of the technical issues that you were experiencing there?
Yeah, one of the interesting things is the solutions were not expensive, right? Changing the workforce, there were costs associated with that, but that was the product of moving from 3 shifts a day to 2 shifts a day. Really a scheduling change and a different way of managing. Changing the mining method was just a different approach to the 3 dimensions of the mine. Renegotiating our offtake agreement, that's just sitting down and talking with people. And the electricity contract had some minor costs, but we're talking a few $100,000. The money that we raised in July was really coming out of Q2 when Mexico was shut down entirely. The government shut down all mining. Definitely need to buttress the balance sheet a bit there. and also to pay off a short-term loan with Sprott Lending that we'd entered into in connection with the Otis transaction. So that was about $6 million and due in mid-September. So we went to our, we were looking at various options for financing, and we went to some of our major shareholders, mostly out of Europe, and they liked the structure, and so it all went to existing shareholders and long-term supportive shareholders. So very successful transaction, good premium to market, and off we go from there.
Okay, so you're saying they weren't expensive solutions, right? So why didn't they happen sooner in that case?
Yeah. Well, okay. So, the labor changes were actually something that had been in process for about 9 months. And it requires, getting people used to different work schedules, putting the teams in place. And, when you reduce your workforce by 25 or 30%, that's tough, right? That's a difficult negotiation. And Q2 was kind of a time for it, right? Everybody understood silver prices going down to $11.50, $12. And what our costs had been for previous quarters and years, that a fundamental change had to be made. On the offtake side, that's really, that's a product of global concentrate markets. There was some shifting earlier this year in the zinc market, which treatment charges had just skyrocketed in recent years. Some breaks or fractures, I guess, earlier this year, which we took advantage of in Q2. I think there's probably more opportunity there going forward in both cons. Zinc concentrate treatment charges have come down further, and lead looks a pretty good market for the seller right now as well. So it's a matter of timing and a matter of preparation, and that's how you make these changes successfully.
Right. Okay. So timing, preparation, and a quite positive precious metals market as well helps.
Yeah, for sure. You having that little bit of buttress, and it's great to be able to reduce your costs as your revenues are going up, right? And increasing that margin, that's really what we're focused on.
Right. So you're going to tell me a story. You've kind of hit the timing right. You're prepping the company for medium term success. Is that how you're going to position it?
Yeah, I think so. Near term, if we're talking 2021 is pretty close now, right? But I think you control what you can control, right? And you can't control revenues, you can't control metal prices. So you really have to think that metal prices are always low, and with some caveats, of course. But and then that's how you control your costs most effectively, and increase that margin. That's the whole point here.
Okay, and do you think the market's giving you credit? I saw the Q3 numbers, some good numbers in there. You are changing, the numbers are heading the right way, right? They haven't been for a long time. So do you think the markets recognize that? Because I'm looking at your share price, and I think, I'd say the answer is no. Why do you think that is?
Yeah, we're definitely not getting recognition for it. But, when we look at the market, we don't look at it from a, why aren't you respecting me perspective, right? It's really, kind of looking at the broader market trends. And, the market has been a bit rough since early August for everybody. We're maybe impacted a little bit more than our peers, but a little bit more, not tremendously more. So it's really, thinking about where the market trends are right now. During the course of this year, since we spoke last in February, we did a transaction to massively increase our resource base, but we announced it on February 28th, right on the brink of the pandemic. Difficult to be doing a transaction and having the drag of a transaction right during a brutal market. It just exacerbates the situation. We were listing on the NYSE. We completed that on September 23rd. We had to do a share consolidation to do that, right? Only 32 million shares outstanding right now. I think definitely some drag of the pending or impending consolidation over the months preceding that. But we're setting up for the long term or the medium term, getting on the NYSE with our peer group. Really just, it's just additional pools of liquidity. And that's what every single producer, what every single company should be chasing. So they're good decisions, but it's not short-termism. It's really focused on creating a stronger product for the long term and thinking about where we are in that bull market cycle right now.
Right. We'll talk about what you're building and what you've added. But I just want to stick with Platosa just for a short bit. Okay. So you're positioning that as a turnaround story. You think the solutions you've come up with are sustainable, and they're sustainable at today's prices.
Yeah, exactly. 1892 all-in sustaining cost in Q3, and we're quite certain we can improve that further from here.
Okay. So right, no more issues. We can move on from Platosa. People will expect you to that asset to continue to deliver at its current run rate, or will you be ramping things up?
Yeah, it's important to kind of contextualize Platosa within our portfolio of assets. it's a 2 to 2.5 million silver equivalent producer. Everybody's tried to do way more, but it is what it is. And we at these metal prices and getting that cost profile lower generates good cash flow for, discovery efforts on, Platosa, Evolucion, Kilgore, Oakley, and Silver City. These 5 assets that we're exploring on all at once.
Well, absolutely. So let's talk about, we were looking at, or you were talking about Otis when we last spoke. And obviously that took a little bit longer than perhaps you hoped given COVID conditions, etc. But it's over the line now. How are things running there?
Well, Oakley is a gold development asset in Idaho. So when we got on the ground in May,
Kilgore.
Kilgore. Is a gold development asset in Idaho. Got on the ground there in May, unrolled our geophysics package, and then really started putting together the team. This was an asset that had been starved for capital, both cash and human capital for years. We've developed a very strong team there now. So at this stage, it's really about moving the permitting forward for the next phase of drilling. So we submitted the plan of operations in July, and we expect to have the EA in the spring of next year and be drilling there by the middle of next year. But lots of prep work for that program ongoing at the moment. Really getting out in the fields, doing prospecting, seeing VG and stream seds, outcrop of this Aspen formation, a higher grade formation, carrying mineralization. So everything is going at the right pace there right now. We'd love to be drilling there right now, but you got to follow the process, do your permitting, and set things up for long-term success. And then
Oakley?
Oakley's that's down in east southern Idaho, and it's actually been optioned out to Centerra Gold, a mid-tier gold producer, mainly producing out of Kyrgyzstan, the Kumtor mine, one of the world's great projects. And so they're spending up to $7 million over the next 6 years to go to 70% on the project. It's 163,000 ounces right now at about 0.5 gram, but definite room to grow. It's, I don't know, Ben, 20, 30 kilometers west of Liberty's Black Pine project, where they're having great success in that part of the system, growing potential ounces.
And that's what we're looking for there, is a similar style, similar type of system. You've had a very successful field season, a lot of geochemistry, geophysics, LiDAR, hit the ground with a fair bit of prospect, and are now in the process of putting a drill program together through the permitting there, which we hope to either start later this year or early next year, following up on that success in the field program. Testing near surface, epithermal, higher grade mineralization, as well as this concept of a bigger disseminated system. So we're quite excited about working with Centerra through that and getting those drills turning.
So I'm sorry, I know they've got an option of up to 70% there, but so what's the relationship in terms of who's actually operating?
Yeah, so they're the operators and we're the managers. So we earn a fee for the management of the project. They're technically the operators, but it's really a very collaborative environment right now.
Okay, and what are you picking up for that?
So they're getting they are earning into up to 70% on the project.
No, I meant your management
and
fee.
It's about 10% of expenditures.
Okay.
Or exactly 10% of expenditures. So yeah,
exactly.
a nice little coupon, I guess, for the work.
Okay, I think we had them on recently. So you think they're good for the money?
They should be okay. I mean, so. Kumtor is like genuinely probably a top 5 gold projects in the world. It's and they're just incredible operators, and it's been a very good relationship so far.
And so just back on Kilgore, I mean, how much money are you allocating to that? Because, again, the thing I kind of bought into back in February was you said we intend to increase our exposure to the precious metals market, as in silver, gold, and geographical de-risking of what it was that you had. So, that appealed to me. So Kilgore is... Where would you rank that in terms of the assets that you've got? Is it third, second, first?
It's, in my view, it's actually first, both in terms of the existing resource base there, 1 million ounces, that's the equivalent of 80 million ounces of silver. And just the growth potential there. The deposit, that 1 million ounces is wide open to the north, south, and west. With step out drilling, you can kind of really expand the existing deposit, this 0.5 gram material. But then there's 10 holes or so into the Aspen formation, which kind of runs below the whole region, outcrops in a couple areas, but it's right under the deposit as well. And they're, drilling in 2015 and 16 hit 4.2 grams over 95 meters, 5.4 over 31 meters. And because it's more structurally controlled gold, a little bit deeper, you have to diamond drill it versus RC, very little drilling done into that part of the system. And structurally, when you look at where we are in relation to the caldera, sitting right on the edge of this caldera, this is really a structurally controlled deposit, and you have to be thinking about it structurally. And that's something that we are very much focused on. I'll let Ben, if he wants to embellish on that, because I get way too geologist sometimes.
No, your geologist. The geologist is strong. It's exactly that. It's the fact that there's already 1 million ounces there. The majority of that sitting in what would be considered like the steam heated, so like the sweats of the system. It's indicative of the scale and the potential size of this thing. And with those holes down the Aspen Formation and understanding the relationship between that and where we want to go to find that higher grade core, which we're seeing evidence of. And that really fits into what we've been doing this year is, building up institutional knowledge, building up a good team of young geos that are hungry, that have gone and done the fundamental work that there hasn't been time to do in the past when you're chasing the drill rig, and then using that knowledge, which I think will ultimately benefit some of the metallurgical test work that we plan as part of next year's program as well. But really understanding what the rocks look like in core, understand what they look like when they're pristine, and then going out in the field and finding more of them and finding mineralization and that gold in stream sediments, and really starting to prove up that thesis that we had when we bought this project, that this is not a one Kilgore wonder. We think that there's multiple opportunities there. We think there's multiple parts of the system that will be mineralized, and we want to see this grow from 1 million ounces to 5 million ounces. And we're starting to see the stuff in surface that indicates that there's more to be found. So that's been a very productive kind of few months for us while getting working with the USFS, US Forest Service on the POO. And I think we've got a budget for about $12 million planned for work next year, with the intent of expanding the resource, starting to do some of that geotechnical, hydrological, and baseline work that we'll plug into an updated engineering study at some point, but also maintaining the surveys, the environmental and cultural monitoring, all that kind of stuff as we go as well, and building up that team. And ultimately, we want to take this from where it is today to be able to show that it has the potential to be over 100,000 ounces a year at over 10 years in kind of the next phase.
Right. So
that budget, sorry, Matt, that budget is actually kind of over an 18 to 24 month period. Correct.
Sorry. Yeah.
Starting in the middle of next year.
Okay, understood. So if this is the target and that's the quantum that you're going to be spending here, and given you said this is about timing it right, you've got to have a view on how long this bull market goes. Okay, so we've had a nice run for 18 months. It's dropped back in recent last 2-3 months, but you're going to have to time this right, as all successful businesses do. So how do you expedite this without cutting corners?
Yeah, that's a very good way of looking at it. We think we've got really the potential for a world-class asset on our hands, right? And those kind of assets withstand all markets. And it really is about, defining how much you have and then doing things in the proper manner. So timing is certainly important, but if you've got an asset that can, transcend the market to some extent, you're definitely better off. But you're right. Like we need to think about the timing for this. Is this going to be a 10-year bull run or a 2 or 3 year bull run?
What do you think?
I think we're in for, a very extended bull run. If you look at 2003 to 2011 or so, there you've got 8 years, right, of bull market. There was a bit of a dip in 2008, of course, but that was a pretty much continuous run in metal prices from $250 all the way up to $1950. I think the situation right now, you always hesitate to say this time is different, but this time is more, right? Like, the debt levels have gone from domestic to sovereign, and there's just no prospect of kind of that being managed over the near term, unless we have, a rising tide, a massive flood of cash rises all boats. But gold has to be the key asset, underlying significant parts of the monetary system as we start to move through this process. So I think we're in for a very long run. What we look at in terms of like when to build versus when to drill versus when to finance or build is really just the cost of capital. And for companies our size right now, you're still looking at 15 to 20% money out of the typical kind of private equity firms. Even for more advanced companies, it's still 10% money. As we get further into this market, you're going to see that 5%, potentially 2 or 3% money, even to the point where who knows where things go. But if you're producing gold in this period that we're coming into, you should almost be being paid for creating real money at the end of the day. So I think we're just on the edge of what's going to be a very interesting time. But it's all about the monetary system, and it's great that we have a vaccine. But again, that vaccine is for people, not for the monetary system. And I don't know what the vaccine is for that monetary system right now.
Okay, but here's the thing. You guys have got a track record, and it's of not doing things very quickly. Do you feel that under any pressure to do things quicker now? Because if I'm a financier and I'm looking at this thing and going, crikey, I'm looking at the share dilution over the last 4 or 5 years. I know you've diversified geographically and by commodity as well, which helps. But and I appreciate you've raised nearly $18 million back in July. But do you feel under any pressure from the institutions or the funds that you raised this money from, or the market indeed, to try to prove them that you can do things quickly, that it really was just a factor of timing in the market?
Of course. There's definitely that pressure. It's from institutions, it's from high net worth shareholders, it's from retail shareholders, right? And that's what shareholders do, right? As management, it's about the discipline of understanding what's best for the projects and best for the company, and ultimately best for the shareholders over the long term, right? So we really have to think about things midterm and long-termism. So that's kind of the way we look at it. It's that always that tension of you want to have as high IRR as possible, but that's a mix of both, asset value and time, right? And getting that mix is really what we're paid to do and focused on doing.
Okay, you're going to offload Platosa?
Mexico's been it's an interesting place to be working right now, but Platosa, when we talk about it and how we have talked about it, we talk about, this cash flowing mine. It's doing very well at these metal prices. But as an exploration project, right, some of the targets we're drilling there are really fascinating as well. Jaboncillo is a target 11 kilometers northwest, which is it's about 25 times the size of the alteration zone that we see at Platosa, right? We know there's a big mineralized system there. We're seeing oxidized galena and sphalerite, the relics of it. So that's a huge potential. PDN is a massive geophysical target that could be a gold copper skarn at depth. It's never been drilled. We're just getting into drilling there now. So there's tremendous potential within the Platosa property itself. And our focus is keep the mine going, keep the mine growing, keep those costs coming down, generate that cash flow to do all these other things. But we're traders, right? If it makes the most sense to do a deal, then you do a deal.
Yeah, you do. And there's also, I get it could generate a little bit of cash contribution, but if your focus is in the US, it's not your number one asset. There's got to be more people who would find Platosa, beneficial to their portfolio in Mexico than you, and you can kind of get a chunk of change and get on with the real business of drilling out the US assets.
Yeah, well, we're always in for a trade. So it's really just about timing and opportunity, as we've been talking about.
But no conversations, I guess, is where I'm getting at.
We're in conversations about everything, always on everything.
Oh, good answer. Yeah, I like that one. Those are my favorite answers. Non-committal. Right. Well, we better go over all the way to Germany, and I guess it's going to be Ben's area of expertise, I suspect. So Silver City, Germany. Some drill results came out recently. Some nice grades, narrow widths though. So what are you trying to do there?
Yeah, just on an overview, if you look at the way that we came into this project and what we're looking to achieve this year, it's an exercise in ticking all the boxes. First thing was whether we could permit a drill program here and get that up and running in a good amount of time. And even with the delays caused by COVID and shutdowns in the German government, we still had that permit on hand in a shorter time than we see in other places and other jurisdictions that we work in. From there, we were able to get competitive rates. A very good contractor to come in and help us with this. We were able to attract good people to the project from the University of Freiburg and from the alumni that also have international experience and now get to work in their own backyard. And then, work with the communities, work with local magistrates, local agricultural companies. And as you can see, the picture behind Brendan there, we set up an arrangement to go and farm. I had to go and work in these farms. The farmers were getting ahead of us, clear us a pad, and work with us. So it established a very collaborative, social license in the area. So those were really big things for us to do. We talked earlier about the pace of projects. It's about also making sure that you do things fundamentally right from day one, that you don't have any negative impacts or create problems down the road. And that's what we've been really focused on in establishing this project and establishing ourselves over there. From there, it was about the rocks, right? Is the geology there? Can we see the proof of concept? Are we seeing those fascinating high-grade Freiberg grades that we've been looking for? And we're starting to see that now as well. We also have a much better understanding for the controls and geology of this first drill program. I think we've still got some good results to come beyond what we've put out so far. We've seen some good-looking rock that I hope gives us what we're looking for, and really underpins that we've gone from having the multiple targets along this 12-kilometer strike length to having 4 priority targets that we want to come back and drill multiple holes at next year. And also we know we have a little bit more of an understanding of what the recipe is for developing new targets as we go forward. With that in mind, the next step is getting those structural constraints right, finding the wider the dilation zones, and starting to see some bigger widths. And I think if we get that, we're into business there. And I think we have a good handle where we want to go. And more significantly as well, in an area called Reichenbach, which has not been part of the trend that was as well historically produced from. We've made a new discovery there that I think blows open that whole northern contact. So I actually think we've increased our potential for discovery through this drill program.
Okay, and again, how much money, time, effort are you spending on this? What do you need to see there to say we will continue to spend time, money, and effort there?
Just a quick note on that. As Ben notes, it's really checking the boxes, right? Can we permit there? Yes. Can we drill there? Yes. The community was curious but engaged and supportive. Is the system there? Yes. Are the markings of high grade there? Yes. We're seeing paragorite and Freibergite. Can we get high grade there? Yes, confirmed as well, right? So checking all those boxes and getting to the point where we're seeing high grade as well. And certainly, as you know, how much are we going to spend? Is this going to work out? It's under an option agreement with Globex, a great prospect generator out of Quebec. We're testing whether this thesis is correct, right? But when you see this core, when you see this mineralization, when you see these assay results, as a CEO, as the guy who has to give Ben the money, you can't walk away from this project. Certainly not right now, because it's one of those projects where the next hole could be that 2 to 3 or more meters of multi-kilo per ton material, which is the ultimate goal here. So we're here for the long term, based on everything that we've seen so far.
Well, I think, okay, from everything you've seen so far, so you can't walk away yet, but we have companies on here who are chasing, high grade, narrow silver veins, and the economics don't stack up. So that's what I'm asking about. Where's the point you need to get to feel that this actually could actually be mined one day? Because it's about the volume of contained metal, right? It's not to say that you can't chase high-grade veins and be successful. You can, open pitable for sure. But that's why I'm intrigued by, what you're doing in country, Ben, and with these, this tick box exercise, because you're sitting, I've got a picture there of a wheat field. So, right? So what do the locals think? What will the permitting issues be coming down the line, and how do you overcome those?
So we can answer that in steps, right? So number one, in terms of what we need to see, we've seen proof of concept, right? But the next thing that we really need to see is we need to be able to see and put together specific gravity on the zone that we can consistently see, more than 2 meters over, 800-900 grams per ton silver equivalent, and that starts to point towards something that, in a modern mine, will be exploitable. And that's the kind of stuff that we've seen in the historical records. We know that this was mined, by these guys in the past. And remember, these guys are mining with a pickaxe, and they're going as wide as their shoulders could carry them, right? So and not really sampling country rock as well, which we are seeing dissemination, we are seeing mineralization into the wall rock. So I think, based on everything we know, there is definitely the potential for the kind of system that can carry a modern mining operation in this part of the world. And that's the next step, is to get hold and to start building a center of gravity around something that looks like that, and then going to find more. In terms of your questions around the local the local economy, remember the University of Freiburg, which is a mining and higher technology institute with the Helmholtz Institute attached as well, is one of the biggest employers in the area, right? So there is a long history of mining and understanding of the necessity of raw materials. This is a historical mining area as well. There's a big quarry that employs a bunch of people just outside of the shot on one of these pictures here as well. And the rest is a very big agricultural community with big agricultural companies farming on private land. So we've done a lot. We've spent a lot of time working with these guys, putting land access agreements in place, setting ourselves up for a bigger program next year as well, and continue to be pleasantly surprised at how collaborative and understanding everybody is and how supportive people are. We've had our guys meeting with go down to parking lots outside pubs to have community engagement sessions where we take people through the mining life cycle, and we talk about what comes next, and we talk about how long things take, and we've been working very diligently with the mayor's offices, and the Oberbergkamp, our regulator, is in constant dialogue with us as well. And this is the ongoing process, but it's just about fundamentally establishing that understanding of what we're doing, what the long term here looks like, but also managing expectations of that. And I think, as Brendan said, we're committed to being here. We see the potential for the grades and widths that could sustain a modern mining operation in a part of the world that generates a lot of that technology and that equipment. So it's just step by step, and the next thing is to start to show that we can build critical mass that has the scale around one of these targets.
Brendan, so back to when we last spoke, things that have changed since then. You had to kind of clear out of the board as well, right? Was that because they didn't agree with your strategy? Was that was that it?
No, that was entirely related to the Otis transaction. Whenever you do a deal, you have to, part of the negotiation is like how many people get on the board. So it was kind of, the fair split as to what worked for both parties. Okay. And then, as well, adding Mike Timmins, who is former VP Corporate Development at Agnico, great strategic thinker, huge addition to the board. And then Anna Kruger joining the board in, I guess, October of this year as well. Who's our CFO, moved on to McEwen Mining, but great friend, team member, and addition to the board for sure.
Right. What does Mike make of $100 million company with 3 assets in 3 countries, or 3 continents actually?
Yeah, I mean, he's it's really interesting kind of getting that Agnico perspective, and it's really about reducing risk and increasing opportunity. Right. That's really the way of looking at it, and very much focused on the time. There's a time to do things, right? There's a time to acquire. There's a time to sustain. There's a time to explore. There's a time to raise money. And so it's just kind of like really working within the proper continuum of when to do the right thing. So he's been a great kind of teacher of the best techniques for negotiating this industry right now with all of his experience.
Okay, but so what's he bringing to the party now? Because you kind of made those decisions on your own. So what's he bringing to the party now going forward? Are we expecting, because he may bring you the ability to raise more capital, is there going to be more diversification?
I mean, again, we're always looking at everything always and talking to everyone. It's always about the trade, right? Does it make sense to do this deal now? Do you have the ballast to be able to do that deal now? Are you getting something for a deal, right? It's just the nature. It's the same thing as buying carpets, right? At the end of the day, there's a time and a place, right? So I think his assessment of is this asset the right asset for us? Well, not his assessment, the whole board's, of course, but that perspective is it the right asset? Are we prepared to do it right now? And is now the time to do it?
Okay, guys. Well, great update. You've moved things along nicely. Like I said, the numbers seem to be heading the right direction. All the numbers seem to be heading the right direction. I look forward to the market catching up.
So do we.
As do we. Yeah.
Okay, guys. Thanks very much. We'll speak to you again soon. Pick up the phone and let us know how you're getting on. Okay.
Great.
Thanks for having us.
Have a good holidays.